Hello and welcome to Africa Business Weekly. I'm Akin Obakaye. This episode promises to be intriguing as we dive into key discussions shaping the business landscape in Africa. Let's get a sense of what's on the show today. The International Monetary Fund believes Nigeria needs to sustain reform momentum that impacts the lives of its over 200 million people. Meanwhile, expectations of South Africa's inflation have dropped. We'll find out what's behind the latest survey. And in East Africa, we look at discussions around cybersecurity and its impact on the digital economy. Karabo brings us up to speed with stories from your region.
A very good evening to you, Akin. Well, after 11 years at the helm, outgoing Capitec CEO Gerrie Fourie will hand over the bank to CEO-designate Graham Lee this month. Lee is the head of personal banking, which remains Capitec's core business. Since Fourie was appointed CEO in 2014, the group has diversified its income. The bank has been ranked South Africa's biggest lender by a number of customers. To reflect on his tenure as the bank's head, CNBC Africa's Nastasia Arendse spoke to Gerrie Fourie, who is the outgoing CEO of Capitec.
Well, it's actually not 11 years. I was privileged enough to be one of the founders in 2000, so it's actually 25 years. 25 years I've been heading up for, 14 years, the operational side. We're looking at all our branches, etc., etc. So it's been a long journey, a very exciting journey. I really enjoyed it. And there's times where you're coming and saying, but yeah, you need to do something else in life. You need to spend other or have other focus areas, and that's just where I am. I like to do things at 130% pace, and if you're CEO, then you need to do it at 130% pace. But I think it's down now to go down to a 70-80% pace. So it's purely just I've got other interests that I want to look at.
I suppose one day, or even in this conversation, we'll touch about what some of those interests may be. But it was quite interesting. Back in 2022, Andre du Plessis, who's also one of the co-founders of Capitec, he said over that period, some of the guiding principles that helped him through that time was simplicity, affordability, accessibility, as well as personal service. Would you say those were the same guiding principles that have helped you over the years when it comes to being at Capitec?
Yeah, for sure. It actually comes down in 2000 when we started. We wrote our business plan for about 6 to 8 months. And then we said, but okay, really, what is our fundamentals? If we're going to run the company, Rian was very strong on what is your fundamentals. And we defined those 4 fundamentals. And ever since, every decision we take goes about those four principles. We were in Exco yesterday, and those 4 principles came out again. So it's a critical part of Capitec's DNA is those 4 principles to ensure that we create value for our clients.
Harry Godfrey here, and I just want to take you back to that momentous day whenever you guys sat down and decided that you were going to build this bank. Did you say you were going to take on the big 4?
Well, the moment you say you're going to become a big bank, or you're going to be a bank, you imply that. I remember writing that business plan with the team, and we were 7, 8 working on it. We said we need to create a bank that will bank 95% of South Africans. So it's not a bank for people with low income or a certain segment in the market, but it's for all South Africans. And I think that's where a lot of people misread us because they thought, firstly, we're looking at the rural areas, we're not looking at the urban areas, and they didn't understand that we're actually going to look for all South Africans. And it was just a journey to get out to it. But our aim right from the beginning is to look at, say, how can we bank all South Africans? And I think that's why if you look at affordability, from the start, we said we need to treat all clients exactly the same. And that's why our pricing doesn't matter, if you're urban, rural, high income, low income, whatever, we price exactly the same. Our products is exactly the same. So it was just part of that whole strategy that we executed over 25 years.
Absolutely. So you did target the big 4 right at the beginning, because if you're going to bank 95% of the population, clearly you're going to be eating their lunch. Let's talk about that journey and how difficult it was. Did you waver at some point? Was it all smooth sailing? And I'm really asking the obvious here.
No, it's never plain sailing. There's a lot of things that happen, a lot of detours. I remember we thought we were going to go in longer term loans. And then we'll get funding, and that was 2008, 2009. You had that world crash that happened. I can give you many examples of, starting a business from scratch, running a business, being involved in a business. It's not easy, but I think if you really believe in what you're doing and you really go out there full guns blazing, you can be successful, and I think that's what we've proven.
According to the latest BER inflation expectations survey, South Africa's inflation expectations have dropped significantly across the board, falling below 4% for the first time in over 4 years. But even as price expectations ease, GDP forecasts have been cut and wage growth expectations have edged higher. To unpack what this all means for the inflation outlook, CNBC Africa spoke to Nicholas van den Wath, a senior economist at the Bureau for Economic Research.
It would most likely be more a structural shift because the higher inflation and the higher expectations we saw in the most recent past is mostly due to that COVID shock that we experienced. So you remember during COVID, there was a lot of supply chain disruptions. Then shortly after that, there was the invasion of Ukraine that disrupted the wheat market, and that caused a lot of food inflation. And all those factors combined with each other caused a huge bump in inflation worldwide. So this happened in America and Europe, and it also happened here. And central banks responded to that with a sharp hike in interest rates. And this medicine worked well for the world economies. So due to the high interest rates, inflation came down significantly, and we're experiencing that downward trough at this moment. So it was probably something that was of a temporary nature, and we're back to lower inflation conditions at the moment.
The survey looks at views coming out of various groups, including business leaders, trade unions, and analysts. And analysts are the most dovish of those three, projecting 3.4% for 2025, while business people and trade unions are higher. What explains this divergence in the views of those three groups?
Yeah, they have a natural tendency to converge a little bit or diverge a little bit from each other. It depends also if you look at the current year and if you look at 3 years in the future. Most of the time, analysts tend to be on the lower side, whilst your business people tend to be on the higher side when it comes to the current year. And then trade unions are more or less in the middle of the three, around the average of the inflation expectations. I think it's mostly because, wage negotiations happens between businesses and trade unions, and they have a certain view on the future. So if you look far ahead, the trade unions have a view of higher inflation and business a bit lower inflation. That's a position where they set up themselves to do wage negotiations. So trade unions always start from a higher point negotiating down, and businesses start from a lower point negotiating up, and then they meet each other in the middle. When it comes to inflation expectations for the current year, it's not always influenced by this factor that I talk now. It's just a position that they tend to have on average in the long run.
Those were the major headlines from the southern tip of the continent this week. It's back to you, Akin.
Thanks, Karabo. As it's a week-long holiday in Rwanda, I'll be standing in for my colleague this week. As mobile money becomes a cornerstone of daily life in many African markets, new questions are emerging about how to ensure its security. CNBC Africa spoke with Tim Theory, Executive Head Cybersecurity at M-Pesa Africa, about how the sector is addressing cross-border threats, protecting users at scale, and adapting to regulatory gaps across the region and the continent. Take a listen.
Access to funds is one of the ways they can be able to maliciously use and liquidate and leverage the malicious cyber attacks which they propagate. So M-Pesa Africa prioritizes protection and security for our data, or the funds that we keep on behalf of our customers, and it's also a regulatory requirement. By prioritizing this security, we ensure that security has been built in from an end-to-end perspective.
And Tim, as you expand into this these African markets, security of cross-border transactions and even customer data are key. So how do you intend to navigate through the varying regulatory frameworks?
Yeah, of course, the plethora of different rules and regulations poses a challenge in terms of integrating the entire African continent. But M-Pesa Africa seeks to work and collaborate together with all the different regulatory agencies, financial regulations and financial regulators to ensure we try and connect together Africa. Africa, with about approximately 20% of the population, only has a 2% participation in the share of global trade, and we need to be able to improve that. So by connecting different countries, by overcoming national borders in terms of the transfer of wealth, trade, empowering trade, we ensure that Africa can be able to thrive and can be part of the global financial ecosystem. So to do that, there are two things which are very critical. One is to ensure that we adhere to all the relevant rules and regulations, including any international standards, for instance, ISO 27001 for cybersecurity, to ensure that both there is a trust from both the regulators, but there is trust also from the users. Because we realize that if our users are not able to trust us with the funds, are not able to trust us that the money that they sent from Kenya to Mozambique or from Lesotho to DRC will not reach there, then people will not use those services. So in addition to meeting all the regulatory requirements and rules and regulations which are there, for instance, anti-money laundering, know your customer requirements, we also ensure that the connectivity we have is encrypted, is securely encrypted. For instance, using as a minimum AES 256 to ensure that our connectivity cannot be interrupted, to ensure that nobody is able to eavesdrop on transactions, and also protecting the flow of data from different countries. Probably as a final step, within my cybersecurity team, we have a security by design department. This ensures that from the word go, from the concept stage, security has been baked in. Previously, 10 years ago, we had security as an add-on. So security was only being included probably when we had new financial products which are going live. But now, from the concept, from the design stage, we ensure security is embedded and built in from the foundation onwards.
And yes, cybersecurity is also very important here. So what impact has this had on service reliability and at the same time customer confidence?
I know one of the principles that we apply from a security perspective is, one, to assume breach. So we are constantly out searching to ensure that if there are any security breaches, if there are any improper security data which is flowing, or any anomalies which are detected, those are prioritized for investigation and resolution. And recently now, we've been able to leverage AI to be able to fast track in terms of identification of these security anomalies. Using machine learning, using pattern recognition, we're able to identify any suspicious trends which would require immediate investigation. Of course, in any security industry, we always know that it is not a matter of when each of us will be impacted by a security breach, a security incident in this case. So we've prioritized this by ensuring that we apply principles of defense in depth.
Meanwhile, as governments across Africa digitize services and systems, cybersecurity is becoming a key issue of national resilience. It's no longer just a technical material about sovereignty, trust, and the ability to compete in a connected world. CNBC Africa spoke to Marc-Andre Locard, Director General of ASN, on the policies, partnerships, and priorities shaping how African states prepare for the risks ahead.
I think that in terms of priorities, I think the first point is to how we can ensure that we develop digital skills. We have a lot of young people in our high school, and they are very passionate, by technology, and we start by creating all the environment that is necessary to develop their skills. Last week, for instance, we started a program with Google. It's a 6 months of program, to help them to obtain the certification of about GCP, which is one of the main environmental tool to develop solution. So the first point is to develop digital skills in our country. The second one was to strengthen regulatory and legal frameworks. So we work on what we call le code du numérique, who is a robust and stable regulatory environment, because since 2017 we didn't change anything, because we consider that before think about that code du numérique, we make a benchmark, an international benchmark, looking at what is going on in Europe, in USA, in Africa, before decided the content of that law, the code du numérique. So it's clearly a stable base that help all the different parties, local parties, the companies, people to know exactly in which environment they are run the solution, in which environment they can sell the solution, in which environment the data are managed. That is the second point. The third point is to accelerate our program to support the critical partners in the ecosystem. Those partners are the critical infrastructure operators. The government launch a process to identify all those critical actors, all those critical enterprise, private or public, and we start working with them to stabilize which governance, which way, which methodology to identify risk, which methodology to help them to be conform, to ensure to be compliant with the regulatory framework that we put in place. And then by the same time, we work with different partners, international partners, to find the financing to support them, to be sure that this third pillar, that is to secure our critical infrastructure, can be really executed.
And now to stories from West Africa. Now, the International Monetary Fund has hailed reforms by the Nigerian government, but they stress that reform gains have yet to benefit all Nigerians, as the government focused on raising growth. In his Article 4 consultation, the Bretton Woods institution notes that Nigeria's economic outlook is subject to large uncertainty, and a recalibration of the 2025 budget and the medium-term expenditure framework is needed to adjust to lower oil prices. Axel Shimofling, IMF Mission Chief for Nigeria, joined us earlier for this discussion.
We've released our 2025 report on Nigeria yesterday. You can find it on our website, imf.org. And I think one of the big messages from the report is recognizing and highlighting the significant reforms that the government and the Central Bank of Nigeria have done over the last 2 years. Of course, the work is not done yet, so continued reforms, continued policy efforts are needed, but they are on the right track. As you said, the external environment is marked by really, really heightened uncertainty, and that requires nimble policy making, ensuring that you have buffers to be able to respond to shocks and anticipate that these shocks are likely to become more frequent.
All right, let's get into your projections for growth before we delve into other areas here. You're expecting real GDP to expand by 3.4%, supported by the new domestic refinery, the Dangote refinery, the high oil production, and robust services. But you also talked about the external environment as still being challenging here and complex. And I'd like you to first break down your projections here.
Right. So, indeed. What really characterizes the projections that we've just put out is this large uncertainty that comes from the external international economic environment. We've seen oil prices decline quite sharply over the last couple of months, starting in April, and uncertainty around trade, but also uncertainty around global financial conditions. With that in mind, we're projecting 3.4% for this year. That's the same as what Nigeria achieved last year, and it's a little higher than in earlier years. Over the medium term, we see that stabilizing at around 3.5%. This projection, very importantly, assumes oil production volume of 1.7 million barrels per day. That includes condensate. That's up from last year, so we're seeing a good push from that, and it's consistent with the production that's been achieved over the first 5 months of this year. I would say over the medium term, I see an upside potential to these volume predictions when the investments, and you just mentioned some that are currently under discussion, come to fruition.
Yes.
So it's hydrocarbon, it's agriculture, it's financial and IT services that are driving that growth. And then you have the domestic refinery that you mentioned.
All right, I'd like to track back to your reform assessment here. Quite a lot has happened in the course of 2 years. We've seen, yes, fuel subsidies long gone, quite other areas around the FX market here. But I'd like you to speak to how the impact we've seen, especially on investor confidence here in Nigeria.
Yeah, so I think that's kind of where the impact is most visible at this point. You've seen a lot of effort from the government, a lot of reforms from the central bank to strengthen the functioning of the foreign exchange market. The Naira is now a free-floating currency. They've done a lot of really, reforms in the plumbing of how the market works, including a new trading platform that was introduced in December. They've built reserves. They've also shared information on the net international reserve position. So that has made trading easier. Everyone in Nigeria, every investor that wants to come to Nigeria can get access to foreign exchange on the official market. And it's also given that confidence. And you clearly see that Nigeria successfully accessed the Eurobond market in December of last year. And in recent months, you've seen 2 upgrades by rating agencies.
And away from Nigeria now to Ghana, the country's consumer inflation slowed for the 6th month in a row in June to 13.7% year on year, its lowest level since December 2021. Meanwhile, Ghana Gold Board says it has crossed the $5 billion mark in gold export value for the first half of this year and on track to export 60 tons this month. Nere Emiko, Vice Chairman at Ken Smith Refinery, joined us earlier for this discussion.
You can see the Ghana Gold Board delivering and moving this train very quickly. A few months ago, I'm not even sure it's 3 months. A few months ago, they told us they would do this. They laid out a whole plan. Made it clear that all other trade licenses by the PMMC and everyone else would be revoked, and that they would be the ones now issuing these licenses. True to their word, July 1st, just as it was about to be July 1st, they're coming out and letting everyone know the time is up. Also, looking at what they've done for exports, we look, last year, I believe Ghana did $4.6 billion export of gold, 66 tons. They've already passed the 5 billion mark at, well, between 50 and 60
And to
60
add the
tons.
contribution of the artisanal miners.
Exactly. This is just a contribution of the artisanal and small-scale miners. So pretty much just for ease of this discussion, in 6 months, they have surpassed what they did last year, what the government of Ghana did last year. This is unprecedented. This is great news. Looking at this and also what they do for their reserves, we should mention that their reserves for gold stood at 8.78 tons May 2023. As of May 2025, their reserves stand at 32.16 tons. This is unheard of. So pretty much what you can see steadily, even the Bank of Ghana has been adding about a ton of gold, that's what I would say, to their reserves every month. And even looking at the statistics of the 20 tons you mentioned that was added, Ghana was noted there as adding 1 ton of gold. So you can see this strategy that Ghana has been putting up, that roughly every month, about 1.5% of their annual gold export is added to their reserve. So you could even call this their royalty. So what I love about what we're seeing with Ghana, it's a mix. Quietly, even before the gold board, there was a quiet effort of growing their gold reserve. And I believe this goes back to when they had their financial crisis. Ghana woke up and they have just done something phenomenal, really, for Africa.
Yes, so we've seen exports definitely going to surge. We're seeing trade prospects for Ghana
Yes.
gold here. But what does this say, and what does this signal to the wider West Africa region, especially for other gold countries that have gold reserves?
I want to compare Ghana, say, to the strategy of Mali and Burkina. And the reason why this is a good juxtaposition is that all of West Africa, the leading region producing gold in Africa, the governments, the economies are agitating, they're looking for gold. But how do you go about this? Ghana has carefully managed to keep investments. Don't scare away your investments, keep your large gold producers. Last month, they had an international conference where they brought everyone to the table, the refineries, the producers, the World Gold Council. They've taken their time to tell everyone what they're trying to do and give comfort to the investors and about what they're doing. And you can see, I brought up their stats. In 2 years, they've done something amazing for the economy and the currency. Burkina and Mali and Niger, all other countries now around, are looking. They probably all have the same prospects, but going about it in a different way. One way is really not giving confidence or going to bring investments into those countries. The other way is, for now, managing investment. So I really think that what Ghana is doing is for the whole of West Africa and Africa as a whole to look at and say, how do you manage this?
Right.
For now, they've got it very right. A way to manage your investor confidence while growing your economy and taking maybe a more nationalistic approach without losing investor confidence and honoring contracts.
And that's all we can take on this episode of African Business Weekly. You can catch all these stories and more on our website, and that's cnbcafrica.com. Thank you for joining us today. Until next time, stay informed and stay ahead with Africa Business Weekly. I'm Akin Obakeye. We'll see you again, same time next week. Bye.